Earlier in the show, we heard from a cotton producer in western Oklahoma. And Kim, what can Oklahoma cotton producers expect for prices?
I think they're going to stay in the neighborhood of where they are. You know, they were up in the 70s and 80s, and with the massive cotton crop that we're getting in this year and around the world, they went down into the 50s for a while. They're back up in the 60s, and they'll probably stay in that area for the next few months.
A lot of the cotton grown in this part of the country actually travels overseas. Are there markets for the cotton still?
Well, there's markets for cotton. You know, China's a big cotton buyer, and the word on the street is that phase one of that agreement's going to be signed in the near future, that they're coming close to that agreement. Of course, we got to watch out on the soybean market, on the cotton markets, on the pork markets. It may be a case with China where you sell the rumor and buy the fact, in that when we get that agreement and that people expect higher prices, they'll hit the market with their commodities, and it'll actually drive prices down. So we got to be careful on our marketing strategies as we make this agreement, because we may not get price movements like we expect.
Are we seeing any price movements in the price of wheat right now?
Price of wheat is kind of walling around, but at least it's going in the right direction slowly. They are moving slightly higher. Our exports have been relatively good, and I think that's supporting our prices.
What kind of indicators are you watching for as that price weaves across the road?
Well, in the short run, I think we'll look at what's going on in the world. You know, we're looking at a record 28 billion plus crop. You look at the ending stocks for the world, a record 10.6 billion bushels. Just a massive crop coming in. We've essentially got the harvest done. We're on the last 6-8% down in Argentina and Australia. Australia, a short crop, Argentina, a record crop. So it's coming, watching those relatively close, and watching the exports. Exports have been real good for hard red winter wheat, say compared to last year. They've been strong, and if they'll continue strong, I think we'll continue to see this price work up. Now in the long run, we got to watch the Black Sea. And the good news out of the Black Sea is their ending stocks just slightly over 400 million bushels. And when you're talking about a 4 billion bushel crop and only 400 million left over, their stocks to use ratio is less than 10%. They don't have any extra wheat, and if they have a short crop next year, then our prices will go up. The other things we're watching is, of course, the winter wheat plantings for the United States. The word on the street is that they're going to be lower this year, especially hard red winter wheat plantings, maybe down as low as 10% from last year.
So with all of that involved there, we should hopefully, it sounds like, could be creeping higher with price. If so, what's going to take to bump it up?
Well, I don't think there's very much in the market that can bump it up, say over 20 or 30 cents before we get into late winter or spring. If we have some problems with this crop, you know, we have the planted acres less than last year. We have a winter kill on it. We've got some problems and not going to have a very big harvest. Then we could see a run up in prices in the March, April time period. If you're looking at harvest prices and beyond, then you got to go to the Black Sea. We got to have a crop failure there before we get, you know, $1, $2, or $3 price move.
Okay, thank you very much. Dr. Kim Anderson, grain marketing specialist here at Oklahoma State University.